What if I told you that the US Federal Reserve could be considering a move so big, so mind-blowing, that it could very much rock the foundation of our financial future? I mean, it sounds like fiction, right? But what if I told you that this move is not only possible, but has actually been done in the past? I mean, this move involves the Federal Reserve, the US Treasury, the dollars, massive amount of gold, and could entirely shift the balance of economic power between the United States and China. So stay tuned with me on this one as we uncover this groundbreaking plan and what it could mean for your investments. The United States is currently grappling with an enormous 36 trillion national debt. And it's growing by the second. Just take a look at the debt clock. It's adding $100,000 every 5 seconds. Isn't that mind-blowing? But here's the thing. It's not just the size of that debt that's alarming, it's the cost of actually servicing the debt. And right now, that debt interest alone costs over $1 trillion annually for the US, which is literally more than the entire US military budget. And with a debt to GDP ratio of about 120% and rising, the US is entering a very dangerous territory. And you might ask, why should I care? Well, you should care because whatever happens in the US affects the rest of the world. And studies from sources like the World Bank have shown that countries with a debt to GDP ratio over 125% rarely manages to sustain growth. So, what could the US potentially be planning? Well, this might sound insane, and you might think it would never happen, except that it has already been done in the past and will most likely happen again. To understand this potential maneuver that I'm going to talk about, let's take a trip back memory lane to 1934. This was right after the Great Depression, a time when people in the United States and in many other countries were struggling to get by. Countries all over the world were going bankrupt because they had borrowed so much money, especially from fighting in wars. But coming out of the Great Depression, the United States in particular was also suffering from a massive debt crisis. Basically, Uncle Sam didn't have enough money to pay its debts. And you see, in 1933, here's how things really work. Gold was considered real money. The paper dollars people were using weren't seen as actual money, they were just promises or claims to gold. So this means if you have a dollar, it was like having a note that says you can trade this dollar for gold. So when the government borrowed money, they didn't just owe dollars, they were actually owing people gold. And guess what? There is no gold printer, so you can't just print more gold like they do with the dollar today. And at that time, President Franklin D. Roosevelt made a very bold and big decision. He issued Executive Order 6102, also known as the Gold Reserve Act of 1934. This allowed the government, literally, you can't make this up, this allowed the government to forcefully seize gold from American citizens. Oh, and that's not all. They also revalued the price of gold. Congress decided that instead of each ounce of gold being worth $20, it should now be worth $35. And this change alone made the dollars worth less by cutting down its purchasing power by 40% almost overnight. Why did they do this? Well, this was a way for the government to manage its debt, even though it meant that more people could buy less than before. Today, some officials in the US government keeps saying that the government has never defaulted on its debt. But history shows that that's not quite true. Back in 1934, the government owed people gold, but instead of paying in gold, what did they do? They decided to pay people in paper dollars, and these dollars were worth 40% less than before. So people who had lent the government money in gold got paid back in these new dollars, which were much more less valuable. The Supreme Court even ruled on this in a case called Perry versus the United States, saying that by paying in devalued dollars instead of gold, the government has in fact defaulted on its promise. So what would a similar maneuver look like today? The US Treasury reportedly owed 147 million ounces of gold in Fort Knox. Yeah, Fort Knox is a secure facility where the government keeps its gold supply. At today's rate of about $2,000 per ounce, the gold reserve in Fort Knox will be valued at approximately 295 billion. Let's just call it 300 billion, right? Now, here's a crazy idea, but again, remember, they've done this before. So what if the United States government decides to revalue this gold stored in Fort Knox? What if they decide that the value of gold is no longer 2,000 but 10x or 15x the book value? I mean, so if an ounce of gold suddenly becomes $20,000 or $30,000, I know this might sound like a stretch, but again, remember, it's happened before. A revaluation like this would add a massive amount of value to the US Treasury balance sheet. This would enable the government pay some of its high interest portion of the debt, which would reduce the overall cost of managing the debt. This move, although it may seem extreme, would send a very strong message worldwide. And what's the message? The US dollar is backed by real value, gold. This would strengthen trust in the dollar, showing that it's tied to something solid, something valuable, and such a boost in confidence is important, especially now as the BRICS countries and the other countries that have been joining them are exploring other currency options. By backing the US dollar with gold, the United States could reinforce its position as a trusted global currency. At its core, this maneuver could be about more than just fiscal policy. It could be a move in the ongoing power struggle between the United States and China. You see, China has been quietly increasing its gold reserve, with some estimates suggesting that they hold as much as 4,000 tons of gold. By accumulating such substantial amount of gold, China could potentially back its own currency with gold, thereby challenging the dominance of the US dollar in the global market. And if China were to move first to revalue or back their currency with gold, well, this could create something we could call a gold-backed yuan, and that will attract countries that are looking for a more stable alternative to the dollar. And this could actually make yuan more attractive for international trade and reserve. However, if the US acts first by revaluing gold and reinforcing the dollars, it could maintain its lead as the primary global currency and prevent China from gaining a major advantage. And this economic tug of war isn't just theoretical, because we are currently seeing the shifts, with China actively promoting the yuan in international trade. Notably, China and Saudi Arabia have signed a 50 billion yuan currency swap agreement to facilitate trade in their local currency, thereby reducing the reliance on the US dollars. Additionally, China has encouraged Gulf nations to accept yuan for oil and gas transactions, aiming to establish the yuan as the key currency in energy markets. You see, this development signals a move towards dollar alternative. In response, the US could revalue its gold reserves to reinforce the dollar's position and counterbalance China's initiatives. So, what's your view on the US-China economic rivalry? Share your thoughts in the comment below. And if you haven't subscribed yet, come on, Subscribe for more insight on global economic dynamics and how it affects the money in your pocket. To fully grasp this situation, we need to look at both the geopolitical power struggle and the economic stakes. See, but ultimately, this is a risky play. If the US were to first revalue its gold reserve, it could achieve several significant advantages, and one major benefit would be the debt reduction, because by adding an estimated $3 to $5 trillion to the treasury balance sheet, the government would have a valuable asset to pay down the high interest portion of its debt, and this could ease off the overall burden of debt servicing and make it even more manageable. Another key benefit would be a strengthened dollar. You see, revaluating gold could help stabilize the dollar value and reinforce its role as the world reserve currency, particularly important as other nations explore alternatives like the Chinese yuan. And finally, the US would gain greater fiscal flexibility. With the added funds from a gold revaluation, the country would be in a stronger position to handle any economic challenges like recession or even trade wars. But on the other hand, this move could come with some serious risk. Just think about it for a minute. By adding an estimated $3 to $5 trillion into the economy, this will lead to massive inflation. I mean, when there's suddenly a lot more money in the system, the value of that money can drop significantly, making prices for everyday goods and services go up. I mean, we've seen this in the COVID-19 stimulus. This was very much smaller than the amount we're talking about today, and we still feel the causes of this record level of inflation. If the government were to revalue gold on this scale, wow, the inflation effect will be even greater, making things much more expensive for everyone. Another risk is that it could spark trade tension with other countries. See, if the US revalues its currency using gold, other countries might see this as a form of currency manipulation. In response, they could just adjust the value of their own currency, leading to what's called a currency war. This would create a messy situation where countries try to gain an advantage by changing their currency value, and this is going to hurt international trade and cooperation. So, I think the bigger question here is, what does this mean for you and I? Because you and I are just spectators in this economic tug of war. There's literally nothing we can do about it, because inflation is almost certain to happen no matter what the US government decide. If they don't go through with gold revaluation plan, they'll still have to deal with a massive debt like printing even more money, which usually causes inflation. If they revalue the gold, this will also lead to inflation as the dollar value shifts. Plus, the competition with other countries like China adds even more pressure that could push inflation higher. So, given the likelihood of rising inflation and potentially currency manipulation, it's prudent to consider investing in assets that typically retain and increase their value during such time. Historically, gold has been a reliable store of value, especially during economic uncertainty. Similarly, other tangible assets like real estate and commodities often appreciate when inflation erodes the purchasing power of fiat currencies. And in recent years, digital assets such as Bitcoin have also gained attention as potential hedges against inflation. While they are more volatile, some investors view cryptocurrencies as alternative to traditional assets. So by diversifying your investment across these areas, you can better protect your wealth and stay a step ahead of economic changes. With the major shifts already happening globally, such as China increasing its gold reserve, its trade agreement with countries like Saudi Arabia, staying prepared is key, because this will help you front run the news and position yourself to benefit in an inevitable economic changes before they impact the wider market. Which is why I make these videos, and I recently made one that shows how you can profit from a looming recession, and that video is coming up right now.